Friends, welcome to our today's session. In your previous session, we have started the topic salaries. Salary, one of the major head of income. You are aware of there are 5 heads of income like salary, income from house property, profit and gains of business and profession, capital gains, and income from other sources. The first head, salary, we are learning with. And in that context, we have understood various concepts relating to salary. Concepts like employer-employee relationship is important, and salary is taxable on due basis or on receipt basis, whichever is earlier. That concept also you have understood. So let me now share the screen with you. And also we have completed the concept of gratuity. Salary has got various elements. The definition of salary, or what are the items that are included in under the head salaries, that also we have seen in our previous session. Now I'm going to share the screen with you. So you're aware of the 3 sections are important here. So for this particular head of income is concerned, these 3 sections are, as you can see, section 15, section 16, and section 17. Right? These 3 sections are important. And what are these 3 sections we have discussed? Section 15 is the charging section. It talks about that salary is chargeable to tax on due basis or basis, whichever is earlier. Section 16 talks about deductions, 3 kinds of deductions. One is standard deduction, second is entertainment allowance, third one is professional tax. And section 17 explains the meaning of certain terms like salary, perquisites, profit in lieu of salary. These terms are explained in section 17. And before starting the topic, previous class, I had given you an introduction of these 8 concepts. First of all, this employer-employee relationship, that is important for us. Okay. Then we have understood that full-time employment or part-time employment doesn't matter. Both are employment, and salary received by part-time employer is also to be taxed under the head salary. Third concept is that foregoing salary means it's an application of income. It is also taxable. Right. But surrender of salary under section 2 of the voluntary surrender of salary is exemption from Taxation Act 1961. That is to be exempted. Otherwise, foregoing of salary will be taxable. And also you have understood there is no concept like tax-free salary. All salaries are taxable. Okay. And place of accrual of salary, that concept, salary is the place of accrual is a place where services are rendered. That concept also we had discussed in the previous case. Advance salary is taxable. Okay, but salary advance, that means advance taken against salary, that is a loan, that is not an income, consequently that will not be taxable. And we have also understood the distinction between contract of service and contract for service. If it is a contract for service, it is not a salary. But if it is a contract of service, it is a salary. And we have understood the tax rates. Earlier we have seen what are the tax rates applicable for assessment year 22-23. And you are aware of that for assessment year 22-23, there are 2 possibilities of tax rates for individuals. They may choose to go for a lower tax rate. Like you see earlier tax rate, the normal tax rate is 5%, 20%, 30%, but optionally it is there 5%, 10%, 50%, 20%, 25%, 30%. The slab is there. But in case somebody offers this new scheme of taxation, then he has to sacrifice certain deductions, certain rebates. So those things are listed here. These concepts also were discussed earlier. Okay. Basis of salary, section 15 we had covered. What is included in the salary, what is not included in the salary, those items are also covered. Right. Now, friends, you see these are the items which are included in salary. This we have understood with reference to section 17(1) of Income Tax Act 1961. Okay. Now, after that, we have studied the concept of gratuity. Gratuity income is also a part of salary. How that will be taxed, we have learned this thing. And we have also done some exercise on that. After this, friends, we had covered. Right? Okay, am I right? Now, today's concept is, we'll start from a new concept, that is leave encashment. Have you heard of this term, leave encashment? That means if an employee has not taken leave for a certain period, he may encash it. Okay, the employer may pay him cash in lieu of that leave. That is called as leave encashment. Leave encashment forms a part of salary and it is taxable subject to certain exemptions. So let us learn this concept. Okay, so leave encashment means, as I told you right now, leave received by an individual on account of unavailed leave. That means leave was due to him, but that individual has not availed. Okay, and due to that unavailed leave, is eligible to encash it, and it is chargeable to income. Whether he is a government employee or not doesn't matter. But there are certain exemptions under section 10(10)AA. Okay, 10(10)AA, would you like to see? So as I told you, section 10 deals with certain income which do not form a part of total income. So under 10(10)AA, exemptions are there depending upon whether an employee is a government employee or other employee. Okay, so let me take you to 10(10)AA section. Just give me 1 second. Are you able to see now? Income Tax Department's homepage.
Yes, sir.
Now guide me, where should I go?
Sir, tax and rules may acts.
Acts. I am looking for section 10. Oh, sorry, first I have to go Income Tax Act. Okay. Income Tax Act, I am now looking for section 10. Sorry, I have to search the section number. Section number 10. Okay. So this is section 10. As you know, incomes not included in total income. So let us see section 10. And I told you the subsection is 10AA. Okay. Are you able to see it now? Yes or no? Are you able to see 10(10)AA?
Yes, sir.
Yeah. So here you see any payment received by an employee of central government or state government as cash equivalent of the leave salary in respective period of and leave at his credit at the time of retirement, whether superannuation or otherwise. Okay, so that means at the time of retirement, if leave encashment is issued by the central government or state government, this will not form a part of total income. That is exempt. Like this, you see certain other conditions are there. So all these things, let us summarize and let us learn that thing now. So let me now take you back to the slide. So section 1010A talks about exemption is there, depending upon whether a government employee or other employee. So now let us see the summary of that section. Is that summary of that section, in fact, is shown in this picture. Now, if you have a look at here, summary is like this. Leave encashment, we can classify into three types of leave encashment. First of all, if it is received on continuation of service, that means the employee is continuing, he is in the job and he is receiving this leave encashment. That is on continuation of service. In that case, what is the treatment of that income? Can you read it out?
Fully taxable.
It is fully taxable. So you need not worry. Just under salary item, salary component, add it if leave is received on continuation of service. Okay. And if leave encashment is received after death, tell me what is the treatment?
Fully exempted.
Here also fully exempt. So you have to remember here fully exempt. So you remember on continuation of service it is fully taxable, and after death it is fully exempt. Now only one kind of classification is that on termination of service. On termination of service means at the time of retirement. At the time of retirement, if employee is receiving this leave encashment, then we have to see whether the employee is a non-government employee or a government. Government employee, it is fully exempt. You have already seen in section 1010A. But for non-government employees, there are 4 limits. This is explained in section 1010A 2 or double I. Right? So there are 4 limits. Okay. Now let us see these 4 limits. 4 limits means all the limits you have to calculate, and whatever is the lowest among them, that will be exempt, and the remaining part of the leave encashment money will be taxable. Understood this picture?
Yes, sir.
I repeat, leave encashment and continuation of service is fully taxable. After death, it is fully exempt. But on termination of services, if leave encashment is received, for government employees, it is again fully exempt. For government employees, it is fully exempt. For non-government employees, there are 4 limits, and we need to arrive at those 4 limits. Okay, what I told you, it is explained here. If it is received on continuation of service, whether by government or non-government employees, they are fully taxable. If it is received after death, whether government or non-government employees, they are fully exempt. But if leave encashment is received at the time of termination of service, then for government employees, it is fully exempt under section 10AA 1. Okay, Roman 1. And for non-government employees, it is covered under section 10AA Roman 2. And for non-government employees, these are 4 limits. Okay, but who are government employees, who are non-government employees? If
Yes,
that point is coming to your mind, try to understand. As you have seen the section, it talks about employees of central government and state government, meaning employees of local authorities, public sector undertakings, foreign government are not government employees. Okay, only central government and state government employees. Leave salary paid to legal heir of deceased person. Deceased employee is exempt, that you already aware of. After death, if leave encashment, leave salary is paid, that is exempt. Okay, so local authority employees, PSU employees, foreign government employees are not government employees. Now coming to the 4 limits. 4 limits are relevant for non-government employees, that too when leave encashment is received on termination of services. Okay, now what are these 4 limits? 4 limits are there. You can watch here. 1, 2, 3, 4. And you have to see that the minimum of this thing is exempt. Please read out what is the first limit.
actual amount received.
The first limit is actual amount received. So what is the actual amount? Suppose the actual amount received is 10 lakh. So you have to take it 10 lakh. Now second amount.
Statutory amount 3 lakh.
Statutory amount of 3 lakh. Okay, so that is a fixed amount. Statutorily, it has been defined. The 3 lakh rupees you have to take. Third limit,
10 times of monthly average salary.
10 times of monthly average salary. So we need to find out what is the monthly average salary into 10. Now, if you are worried that how to calculate that monthly average salary, friends, you have to calculate like this. That is average salary of past 10 months. So first find out past 10 months salary, average it out, then 10 times. So multiply it with 10. Understood? Third limit.
Yes, sir.
That fourth limit, please read it.
Maximum 30 days salary for each completed year of service after deducting leave actually availed.
Okay, this you need to understand. 30 days salary, maximum one can take 30 days salary. There is a upper cap that for each completed year of service, one can claim leave encashment for 30 days. So we need to find out what is the complete, how many years of service has been completed. But again, you watch, it is written the completed year of service. A part thereof exceeding 6 months, this term is not there. Okay, so you have to take only the number of years for which are completed. So take the completed year of service. Then maximum limit is that 1 month for each completed year of service, or 30 days salary for each completed year of service. But if leave has availed, that has to be deducted from there. Minus leave actually availed in months. Suppose I'm calculating completed year of service into 1 month. Suppose one has completed 15 years of service. That means 1 month salary into 15 years, into 15. So 15 into 1. And if the person, that means 15 months totally. And if the person has availed leave 2 months, so 15 months minus 2 months. How many months will be? 13 months. So 13 months salary multiplied with average salary per. Understood the concept?
Yes, sir.
Okay. So maximum 30 days salary has to be taken for each completed year of service after deducting leave actually availed. So these are the 4 limits. So we need to find out the amounts of these 4 points. Then what we will do, we'll find out what is the minimum of that. That minimum amount will be exempted, but the remaining amount of leave encashment received is taxable. Okay. Now, let me explain you what is the meaning of completed year of service. Friends, completed year of service means fraction of year is to be ignored. That means suppose someone has completed 15 years at 3 months. So how many years you will take as completed year of service?
15 years.
And somebody has, let us say, completed 15 years and 11 months. How many years you will be taking?
15 years.
Again 15 years. So fraction is to be ignored. And when I see, when we are using the term average salary means last 10 months average salary immediately preceding the month of retirement. Okay, we need to find out what is the month of requirement, and preceding 10 months salary needs to be averaged out. And here salary means basic salary plus DA. DA means dearness allowance, provided it forms a part of retirement benefit. That means for calculation of other retirement benefits like gratuity, pension, etc., the DA is taken as a component. So DA, if it forms a part of retirement benefit, then only it will be included with basic salary. Plus, commission will be included if it is fixed as a percentage of turnover. Okay, so this is the meaning of salary. Understood now?
Yes, sir.
Now, what I told you, you can see in summary form. Just watch this picture. This chart explain you. If it is received during the period of service, fully taxable. Received on retirement, whether on superannuation, otherwise. By government employees, is fully exempt. For other employees, you see provisions are there under section 10, 10(882). 3 lakh rupees leave actually received a 10-month salary on the basis of average salary of last 10 months preceding retirement. And fourth limit is cash equivalent of unavailed leave based on last 10 months average salary to his credit at the time of retirement. To his credit means if the leave has availed, that has to be deducted. And leave entitlement cannot exceed 30 days for every year of actual service. Therefore, maximum 30 days salary for each completed year of service. Okay, this has been explained to here, right? Did you understand the concept of leave encashment? Will you be able to calculate? Yes or no? Or should we do an example?
Yes, sir.
So let us do this thing. Let us start an example. Just give me a second. Let me share the screen with you. Are you able to see the screen now? This Excel file? Are you able to see it?
Yes, sir.
Okay. Now you see this is the situation you see. 10-year salary is data is given to you. Basic salary is 10,000, 10,200, 10,100 like this. This is the basic salary. And there is a DA. And it says the DA forms a part of retirement benefit. This is a DA. And there is commission fixed as a percentage of turnover. Nothing is there. There is zero. So as you have understood, what is the total salary? Now whether DA will be included or not?
Yes, sir.
Included. Suppose commission will be there. So commission is, let us say, fixed as a percentage of turnover. That also you can include it if you want. Is it not? But if the commission is a different kind of commission, which is not fixed as a percentage of turnover, then you have to take zero. So total salary figures are here.
Yes, sir.
Okay. So total salary, you know, this is the total salary in 10 months. And average salary, you can find it out average. Check the formula. This is the average of past 10 months salary immediately preceding the month of retirement. Okay. So what is the average salary of past 10 months? Tell me the amount.
15,495.
Okay. So got it. This is the basic data given to you. Now, one more information is also given to you. Leave already encashed are here. How many days?
45 days.
Which is equivalent to 1.5 months. So to take in months, it is 45 days. Okay, 30 days, 1 month. And the question says completed year of service period, 27 years and 7 months. So how many years will take as completed year of service?
27.
27 only, 7 months is to be ignored. And the actual amount of leave received is 5 lakh rupees. Okay, so this is the question given to you. So take a piece of paper, try to find it out, how much will be exempted, how much will be taxed. Okay, quickly calculate. So note down fast. Average salary is how much? 15,495. Okay, leave already encashed 1.5 months or 45 days. Completed year of service 27 years. Amount received as leave encashment is 5 lakh rupees. Okay, now I'm showing you the limits again. Just recall and try to find out that how much will be exempted and how much will be taxed. Okay, these are the limits. Can you calculate?
Yes, sir.
Okay. Try to compute it. I'll be helping you, don't worry, but you make attempt to arrive at how much is to be exempted. First limit is actual amount received. Second is statutory amount 3 lakh rupees. Third is 10 months average salary. Fourth is little important. Maximum 30 days salary for each completed year of service after deducting leave actually availed. Should I help you? Now watch here. Have you done it?
Yes, sir.
So first you see, average salary you have taken 15,495. No issue. That's right. Completed year of service 27 years. Leave availed in months is 1.5. So actual receipt is 5 lakh rupees given to you in the question. Statutory limit 3 lakh rupees you are aware of. It is there in the provision. 10 months average salary 1,54,950 you have calculated here. Here 1 lakh. 10 months here you have calculated 1,54,950. Okay. 10 months average salary is this one. Okay. That means average salary of 10 months into 10. Are you able to understand?
Yes, sir.
First, you have to calculate average salary. This is average salary and into 10. This is there. And this average salary has to be computed taking 10 months data. 10 months data average salary this month. And here when I say 10 months average salary, you have to say average salary into 10 months. Okay. Now, 1 month for each completed year of services minus leave taken. So you see how it is calculated. So 1 into each completed year of service is how much? 27 minus 1.5. So 1 into 27 means 27 months. 27 minus 1.5. How much it is? 25.5. Yes or no?
Yes, sir.
So 25.5 months into average salary. So how much it is? Average salary is 15,495. Okay, so if you see, so 15,495 into 25.5 will get a figure 3,95,123. Okay, understood?
Yes, sir.
Of which is the minimum? These are the 4 limits. 1, 2, 3, 4. What is minimum?
The statutory limit, sorry, the 10 months average salary.
10 months average salary. 1,54,950 is the minimum. So this will be exempted under section 1010 and for 10 then what is taxable? Out of 5 lakh rupees, this if this is exempted, this is taxable 3,45,050. Did you understand this example?
Yes, sir.
Okay. All of you have understood. This is how you'll find out how much is taxable and how much is exempted for leave salary. Okay. Should we move to the next provision now? What do you say?
Yes, sir.
Good. Now, next provision is pension. Okay, pension you are aware of, and you are also knowing that salary includes salary received from the present employer as well as from former employer. When I say pension, that means it is received from the former employer. Pension is also salary, and If you refer to section 17(1)(2), you'll find out what is pension. And you will also understand there are two possibilities. The pension means it's a regular periodical payment received by the employee after his retirement. And this pension can be commuted and can be uncommuted. Commuted means the pension is paid as a lump sum instead of being paid periodically. So normally a person receives pension on monthly basis. But if somebody wants and depending upon his terms of employment, he can get it commuted. It is also possible to commute the pension partially. That means 50% of the pension can be commuted. A balance 50% can be received periodically. Okay. So commuted pension paid in lump sum instead of periodically. The present value of the projected pension is calculated. That is called as commuted pension. If the employee is interested, he may commute his pension. Uncommuted, paid periodically instead of lump sum. Understood? What is commuted pension? What is uncommuted pension?
Yes, sir.
Okay. Now, friends, now the treatment will depend whether it is commuted pension or uncommuted person, and whether the person is government employee or non-government employee. So, friends, this provision we have to learn by using two sections, section 17(1)(2), and also exemptions are there under section 10(10)(a). 10(10)(a) I'm not showing you, but you may refer to the act. I had already shown you earlier, 10(10)(a). So 10(10)(a) also you can refer to, read it, and then interpret. But the summary of this 10(10)(a) is shown here. So as you can see, we are saying one kind of pension as uncommuted pension, then commuted pension, and there is also a third possibility which is called as the family pension. Family pension means the pension is not received by the employee, rather it is received by the employee's legal heir. Okay, this is the pension received after death. Suppose employee dies, his spouse receives that pension. And in some situations, the minor child also receives pension till they attain the age of majority. So these pensions are referred to as family pension. But in case of family pension, now friends tell me whether there is an employer-employee relationship in case of family pension. That is, the employee passed away and his spouse is receiving the pension. So can you establish employer-employee relationship in this situation? Yes or no?
No, sir.
No. Since employer-employee relationship is not there, so this will not be taxed under the head salary. So it will be taxed under the head income from other sources. Got it?
Yes, sir.
Okay. So family pension is not taxable under the head salary. It is taxable under the head income from other sources. Now, coming to this part, pension. So uncommuted pension means regular pension. They're just like salary, and you can see the treatment. What is the treatment here for uncommuted pension? Can you read it here?
Fully taxable.
Fully taxable. So uncommuted pension, you need not worry. There is no exemption, fully taxable. And commuted pension, here you have to see whether the employee is a government employee or non-government employee. As you have seen, if they are government employees, then what is the treatment?
Fully exempted.
So commuted pension for government employees are fully exempt. So here also you don't have to apply your mind much. You have to see that it is a government employee, so pension is fully exempt. But for non-government employees, they have treatment is given under section 10(10)(a)(2). Here, non-government employees, here again two possibilities. Here we have to see whether employee receives gratuity or employee doesn't receive gratuity. Okay. Application of gratuity act is different thing and receipt of gratuity is different thing. Here the provision say if the employee is receiving gratuity, then how much is exempt? 1/3 is exempt. And if the employee does not receive gratuity, then more amount is exempt. That is not 1/3, that is half is exempt. Understood? What you have to see, whether employee is receiving gratuity or doesn't receive gratuity. Okay. So there is a possibility the employee might have covered under gratuity act, may not have received gratuity. That's a different thing. Here you have to see whether he has received gratuity or not received gratuity. Are you getting me?
Yes, sir.
So what I explained you, the summary of this provision, so you can watch here. Uncommuted pension, whether received by government employee or non-government employees, are fully taxable. Commuted pension received by government employees are fully exempt. And commuted pension received by non-government employee, if he receives gratuity, 1/3 of the amount of pension which he would have received had he commuted the whole of the pension shall be exempt under section 10, 10A2. Okay, from the whole amount of pension, 1/3 will be exempt. And if he doesn't receive gratuity, half of the amount of pension which he would have received had he commuted the whole amount of pension shall be exempt under section 10, 10A2. And pension after death, which is referred to as family pension, is fully taxable and they had income from other sources and not exempt under section 1010. So pension part is clear to you?
Yes, sir.
Yes, sir.
And here also you see what is the meaning of government employee. Here's government employee meaning is different. Here government employee includes central government employee, state government employee, local authority employee, statutory corporations employees, and judges of High Court and Supreme Court. There is one connected point also we need to understand, that pensions from United Nations organizations are exempted under section 1010A. And as I had explained you sometime before, that coverage of Gratuity Act is not relevant. Whether employee is covered under Gratuity Act, that is not important. Receipt of gratuity is relevant. Therefore, the provision says that if he receives gratuity, then 1/3 is exempt. If he doesn't receive gratuity, then half is exempt. Employees covered under Gratuity Act, that's different story. But receipt of gratuity, we have to compute this exempted amount on the basis of the fact whether employee has received gratuity or has not received gratuity. Okay. Now one question might be coming to your mind. Then okay, something is exempt, but something is still taxable. But when you are receiving commuted pension, you'll be receiving a lump sum. Employee will be receiving a lump sum. That when one person receives lump sum, there is a possibility that he might have to pay tax at a higher slab rate. But in the same income, assume that it would have been distributed over a period, then he might have paid tax at a lower slab rate. Because their slab rates are like this, progressive slab rate. As your income rises, so you pay tax at a higher rate. Is it not? That possibility is there. Or
Yes,
so,
sir.
so in that case, if employee is interested, then he may avail relief. He may apply for a relief under section 89(1) for claiming a rebate for this commuted pension. Okay, what is section 89(1) will be learning shortly. Okay, see here what happens if salary for more than 1 year is received at a particular point of time, and consequently employee has to pay tax at a higher rate, then employee can claim relief under section 89. Understood the concept of pension? What
Yes,
I explained you in the context of pension, The entire thing is once again shown here in this chart. You see, it may be commuted or uncommuted. Commuted means, again, we have to see employees of central government, local authorities, statutory corporation, member of civil services, defense services, etc. They're fully exempt. Other employees, you have to see if the employee is in receipt of gratuity, then 1/3 of commuted pension is exempt. And if it's not in receipt, then half of the commuted pension is exempt. And uncommuted pension is fully taxable. Okay.
Yes,
Is
sir.
it clear to you?
Yes, sir.
Okay. So let us do an exercise on this pension. We will discuss this point. You see, this is the situation. Let us assume Mr. X got 50% of his pension commuted and received how much? 12 lakh rupees. Find out how much is taxable if A, he's a government employee. You know, the government employee, what is the amount taxable? It's fully exempt. Is it not? Is it
Yes,
not?
sir.
Sure, nothing is taxable. Taxable amount is zero. But secondly, if he's a private sector employee and one, he is covered under payment of gratuity. Okay, second case, he is not covered under gratuity. Third case, he is in receipt of gratuity. Fourth case, he is not receipt. He is in not a receipt of gratuity. You see, coverage of gratuity act doesn't matter to us. Is it not?
Yes, sir.
Yes, sir. So coverage of gratuity act means you have to say Ajit has not just because question is silent whether he has received the gratuity or not. So we are assuming that he has not received the gratuity. Because whether it's received of gratuity, question is has not informed us. So what will be exempt? 50% will be exempt, half will be exempt. So out of this 12 lakh, 6 lakh will be exempted, so taxable amount will be 6 lakh. Same also, if it's not covered under gratuity act, 50% will be exempt, so 6 lakh will be exempt, 6 lakh will be taxable. But in case he is in receipt of gratuity, then not half, 1/3. 1/3 will be exempt, isn't it? So out of 12 lakh, 4 lakh will be exempt, 8 lakh will be taxable. And in case he is not on receipt of gratuity, then again 50% will be exempted or half is exempted. So 6 lakh will be exempted, 6 lakh will be taxable. Did you understand this example?
Yes, sir.
Is it clear to you? Yes.
Yes, sir.
Okay. So we covered this part, gratuity and leave encashment. Now, the next concept is which we are going to learn. Friends, I was just now telling you about the relief when salaries received in areas. Okay, like our pension is received in advance or salary is received in advance. In this situation, what happened? Employee receives salary for more than 1 year in a particular time. Okay, so consequently, he might be liable to pay tax at the higher rate. To give benefit to the employees in this kind of situation, this relief is allowed. So if you refer to this particular section, as you can see, section 89, the title is Relief when Salaries Paid in Arrears or Advance. The provisions are like this. If an assessee is in receipt of a sum in the nature of salary being paid in arrears and advance, or is in receipt of in any one financial year of salary more than 12 months. That means the employee is receiving salary for more than 12 months. Okay, so now due to this situation, his total income is assessed at a higher rate. Right? Suppose employees total income cross 10 lakh rupees. So of certain income, he might have to pay tax at 30% slab. But had the income been distributed over a period, he might have paid tax at 5% or 20%. So since he is receiving more than 12 months salary in a particular year, his total income may be assessed as a rate higher than the rate at which it would otherwise have been assessed. Understood the point? In this situation, what will happen? The assessing officer shall, on application made up by him, that means employee or the assessor needs to make an application. And on the basis of that application, the assessing officer may grant leave as may be prescribed. Okay, how relief will be computed? What the assessing officer is actually going to do? He will find out. First of all, he will find out that how much salary the employee is going to pay. For example, let us take a calculator. For example, let us say one employee is receiving 10 years arrears. Okay, past 10 years salary. 10 years of arrear payment is receiving. He is receiving 20 lakh. Understood? Are you able to see?
Yes, sir.
Yes, sir.
Okay, 20 lakh rupees amount he is receiving. And his current year salary is 10 lakh. Current year, how much tax he would have paid? Up to certain income, up to 2.5 lakh nil. Then he could have paid at 5%. Then he could have paid at 20%. So maximum slab is 20%. He could have paid certain. But when this another 20 lakh is added, he's to paying on this in this 20 lakh rupees, will be paying tax at the rate of 30%. Is it?
Yes, sir.
So what the assessing officer will see that how much extra tax this assessee is paying. How he'll calculate how much extra tax? You will see if this 20 lakh rupees would have been distributed in different years, how much tax he should have paid. Okay, this is the tax he should have paid. And how much he's already paid. Okay, already he has paid this thing. If this 20 lakh would have been distributed extra, he would have paid something extra. Let us say he would have paid 50,000 rupees extra. That means this 50,000 rupees is actually due. But here the same income is added here. He's paying at 30 rupees. Let us say he's paying 75,000. Okay, when it is added here, he's paying 75,000. If it would have been distributed, you would have paid 50,000 rupees extra. So this difference 25,000 will be allowed to him as rebate. Understood?
Yes, sir.
Yes, sir.
Okay.
So therefore, the total amount will be exempted. Whatever is the extra amount, that will be exempted.
Yes, total amount is not going to be exempt. The extra amount. Okay, point here is that the employee should not suffer. Just because he's receiving a lump sum, he should not be charged extra. But whatever amount is due, he should pay. It's the same area he should have received. He would have received in this 10 years. He should have paid 50,000 rupees extra. But now, when it is included in a particular year, now he's paying 75,000 extra. So, therefore, these two things will be compared. The extra 25,000 will be allowed to him as a rebate, provided he applies for it. Okay, Section 89 relief is not automated. So you have to apply for it. Online application can be made.
Yes, sir.
Understand?
Yes, sir.
Okay. Now, friends. This is the provision for I discussed. Okay. But sometimes you're aware of employees also receive more than 12 months salary when they opt VRS. VRS means voluntary retirement scheme. And under voluntary retirement scheme, certain exemptions are allowed under section 10C. So if one is opting for 10C rebate for VRS, he cannot opt exemption or relief under section 89. So this is the subsequent provision which is appearing below. So this is again one more thing you have to keep it in your mind. Okay. So no such relief shall be granted in respect of any amount received or receivable by an assessee on his VRS, voluntary retirement or termination of service in accordance with any scheme or schemes of voluntary retirement, or in case public sector company, refer to clause 1 of section 10C of section 10. Okay, so this provision in fact says in case of VRS, this particular relief will not be allowed. Okay, because he's already claiming a kind of exemption under section 10C. Understood this?
Yes, sir.
Yes,
Okay.
sir.
Now, this calculation, how this relief under section 89 will be calculated, just let me show you. One thing is that manually you can calculate by distributing income over years, or in the income tax department website, you can find a calculator. So let me take you to income tax department's website now. Let us go to the home page. Please make yourself familiar with all these calculators. They'll be very helpful to you. You know where calculators are available?
Tax calculator.
Yes, tax calculators. You see, these are the calculators. So you'll be learning all these calculators in salary chapter: medical facilities, rent-free accommodation, transport allowance, children education allowance, income and tax calculator, deferred tax calculator, tax calculator. Then let me go to the next page. Page 2. Just give me a second. It is little slow. You can try. Yeah, let's once again go to second page. Yeah, second page. Now you can see advanced tax calculators, TDS calculators. So many other calculators are there. Let us go to third page. Third page, you see what is the first calculator? Can you see it?
Yes, sir.
Relief under section 89. So if you click here, you can give the relevant data. Okay, relief assessment year, previous year, tax status, residential status, BOB, gender, all these things you have to type. Then you see salary received in area, gratuity received for past services. So if this data you have to give, then relief will be computed. Did you understand?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Friends, one more thing you have to remember as regards to relief under section 89(1, that the assessee also needs to file a form which is called as form 10E, right? So assessee has to apply for that relief as well as has to file a form under section 10E. 10E form, let me try to show you just an example. Let me try to say, just give me a moment. Here you can see an example of a form. Are we able to see it? This is a system generated form. After online filing, this has been generated. So
Yes,
name
sir.
of the employee, permanent account number, residential address. You see salary received in areas, that information that has to give it. Salary received in advance like this information has to be given. Form has to be verified. Okay. So what is the total income excluding salary received in areas? What is salary received in areas? What is his total income? All this breakup has to be given. Tax and the total income as per taxpayer. Tax on the total income as per system calculation. Like this calculation has to be given. And finally, you see relief under section 89 indicate the difference between the amount mentioned in item number 6 and 7. 6 is the tax and salary received in areas. This much is the tax he has to pay now. The tax computed in accordance with the table A. That means if the same income would have been distributed in different years, you see this is for different years, right? These calculations are there. He should have paid nil. No amount would have been paid. But since it is added here, he is paying 1,12,000 something extra. So this 1,12,000 rupees is claimed. Understood this provision?
Yes, sir.
Okay, this is one actual case. At this point, you need to keep in your mind. Now, this point just now I explained you, Form 10E is to be filed at the time of filing of it. Otherwise, the rebate which is claimed by assessee may not be allowed. Now, friends, let us move to the next item of salary. As you can see, this item is retrenchment compensation. That means when the employee is retrenched or removed from the job, the compensation is paid, and that also forms a part of salary. There are some exemptions. Let us learn it one by one. So retrenchment compensation means compensation for cancellation of contract of service by employer. So in fact, this is the compensation for loss of service. Right? A retrenchment compensation, the exemption is dealt in section 10(10)(b). You can refer to section 10(10)(b). You can find out how much is exempt. So as you can observe here, so we can classify the retrenchment compensation in two types. One is received under any scheme approved by central government. Right. Second is received under any other scheme. If central government has approved the scheme, then it is, you see the treatment. What is the treatment? It is fully exempt. Fully exempt. But if the retrenchment compensation is given under any other scheme, which is not approved by central government, then how much is to be exempt? This is provided under section 10(10)(b), and there are three limits for that. Okay. So three limits are explained here. So you have to calculate these three limits, and least of that will be exempt. Okay. Understood?
Yes, sir.
Okay. How much? What are these three limits? First amount is actual amount received. So please see how much actually received. Second is the statutory limit is how much here? 5 lakh in case of retrenchment compensation. Point number 3, amount calculated as per section 25FB of Industrial Dispute Act 1947. What is that amount? That amount, if you refer to 15FB of Industrial Dispute Act 1947, you find it says same thing that we have learned at the time of gratuity. That is 15 days average pay for each completed year of continuation service or a part thereof exceeding 6 months, computed on 26 days per month basis. In gratuity, you have done similar calculation? Yes or no?
Yes.
So here also, we have to calculate like this. So would you like to see an example?
Yes, sir.
3 amounts you have received. First one is actual. Second one is 5 lakh rupees statutory amount. Third one is 15 days average salary for each completed year of service or a part thereof exceeding 6 months, computed on 26 days per month basis. So let me try to share an example with you. Give me a second for that. Now you can see. Let us say, we'll say how much is exempted for retrenchment compensation. Salary of last 10 months data is given here. So average salary is also computed. You can see the average salary. How much is the average salary?
10,400.
Yeah, 10,450 is the average salary. And completed a year of service, the question says 630 years and 6 months. So how many years will take?
30 years.
30 years. Why 6 months is not taken?
Because fractions are not allowed.
Where it's written fractions are not allowed.
I guess it is calculated annually, maybe that's why.
No. Again, you see.
Similar thing we have
Told
done
you,
in equity and others.
here it has told you that for each completed year of service or a part thereof exceeding 6 months. So your answer should be the 6 months has not exceeded 6 months, therefore you are taking 30 years. If you are saying a part of the fraction will be ignored, answer is no. Suppose it is 30 years and 7 months. How many years will you take here?
31 years.
31 years, because it's exceeding 6 months. So try to appreciate the logic here. So part thereof exceeding 6 months has to be taken. Okay, and actual retrenchment compensation receipt is 12 lakh. So in this situation, you have to find out how much is exempt and how much is taxable. Okay.
Yes,
Now,
sir.
actual receipt you see 12 lakh. Then what is the next limit?
Statutory limit.
Statutory amount is how much?
5 lakhs.
Then third limit is, who has remember? 15 days salary. Is it not? For each completed year of service. How will be computed? Average salary is available with you. That you have to take, it's a 26 days salary. Then what is 15 days salary you can arrive at. For each completed year of service, arrive at the amount. Now tell me what is the third.
So after receiving the 15 days as amount, like we have to see whichever is lower and that has to.
Yes, whichever is lower, you have to see. Please compute. Computed. Let me help you. Actual amount is 12 lakh. Statutory amount is 5 lakh. Next, you see 15 months, 15 days salary for 30 years. So simply we have to do what we have to do. The last salary which is got divided by 26 into 15 into 30. If you calculate, you will find out 1,80,865. Okay. Should I show you? I'm showing it here in this cell is equal to, this is the average salary divided by 26. You got, when you divided by 26, you got daily salary into 15 days. So you got 15 days salary for 30 years into 30. So you are getting the figure 1,80,865. That's the figure I have taken. And of these three, lowest is how much?
1,80,865.
That is exempt. So out of 12 lakh rupees, 1,80,000 something is exempt. So 10,19,135 will be taxable. Understood?
Yes, sir.
Okay. If retrenchment compensation part is over, let us move to the next concept.
Yes, sir.
Next concept is, friends, about VRS. You know what VRS stands for. What is this?
Voluntary retirement scheme.
Voluntary retirement scheme. So when an employee receives some money under VRS, so that also forms the part of salary. But it is taxable for whom and exempt is how much? We need to learn that. So this concept of VRS is dealt in section 10(10)(c). I think you'll be able to find out section 10(10)(c). Should I show you? Or you can find it out?
You can find it out.
You can find it out, but I will request all of you to familiarize yourself with the VAR Act. Please refer to the section, read it, try to understand the provision, and then see how the same provision has been explained here. The slides will be helping you in understanding the concept. But as a student of law, I expect all of you to read the law. Okay, not just refer the slides. Please read the law. Now, you see here the compensation of VRS is exempt to the extent of minimum of a actual amount received as per guideline. What is that guideline we will be learning? Second is rupees 5 lakh. So minimum of this thing is exempt. So 5 lakh is a statutory amount. But what is that condition? There are certain conditions attached to it. So this section actually, this particular provision you need to read so that you can understand what are the conditions. First condition is that, please read condition number 1.
Received from specified employer.
That means if this VRS is received from any other employer other than this specified employer, then it will be fully taxable. There will be no exemption. First condition is that this VRS money should have been received from specified employer. At point 2,
Scheme must be framed in accordance with prescribed guideline under Rule 2BA.
yeah, so this is one more. The scheme should have been framed as per prescribed guideline under Rule 2BA. So this is important here. So we need to understand both the things. What is this guideline? Because guideline is relevant here. You see actual amount received as per guideline. So what is that Rule 2BA of income tax rule? We'll see that. And who are the specified employers? That also we are going to learn. First, let us understand the concept of specified employer. So please read it out. There are 11 types of specified employers are there. Only BRS paid by them will be considered as considered for exemption. Number 1, 2, 3, 4. Please read it out.
Company, central government, state government or provincial authority, local authority, cooperative society, specified universities, IITs, state government, central government, IIMs, IIFTs, and any other notified institution.
So PRS compensation from individuals, HUF, AOP, etc. are fully taxable because they are not specified employees. They are not specified employers. Is it clear to you? So these are the only specified employers, right? And there is other notified category. There are some employers. So only those employers, if they are paying BRS, it may be exempted to some extent. Second thing is that you see, we need to understand what is that guideline. Guideline, entire guideline I am not showing you, but by referring to Rule 2BA, so important points of that guideline, which you see, this guideline says the objective of the schemes should be reduce the number of employees. And the vacancy cause should not be filled up. That means actually there should be a real reduction in number of employees. The retired employees are not to be employed in the concern of the same management. They should not be re-employed. And this scheme should be available to all employees who has completed 40 years of age or 10 years of service. Then the compensation must be following: 3 months salary for each completed year of service, or salary for remaining tenure. How it is to be calculated remaining tenure? Salary at the time of retirement into number of months of service left. On that basis, you have to calculate. And this particular exemption that you are availing under Section 10C will be available only once in lifetime. So if 10C, if someone is claiming relief under Section 89(1), it cannot claim relief under Section 1010C. Or if someone is claiming exemption under Section 1010C, he cannot claim relief under Section 89(1). And here, friends, salary means basic salary plus dearness allowance if it forms a part of retirement benefit, plus fixed percentage of commission on turnover. If commission is fixed as a percentage of turnover, then only it will be included as salary. And again, salary means last drawn salary, not 10 months average salary. Which salary? Last drawn salary. Are you able to understand?
Yes, sir.
Okay. Oh, just a minute. 1 second. Just one thing I wanted to highlight this thing, that I told you that compensation must be following: 3 months salary for each completed year of service, or salary remaining for the remaining year. Okay. That means either first one or second one. Both things are possible. Rule has not specified whichever is higher or lower. Like that, there is no prescription. So compensation can be decided by the employer. He may pay either 3 months salary for completed year of service, or for each completed year of service, or salary for the remaining 10. Is it clear to you?
Yes, sir.
The next item we are going to learn is the annuity. Annuity means, just like pension, it's a periodical payment by employer to employee. That will also form a part of salary. Okay, so try to understand. Annuity is included as salary under section 17(1), 2. Okay, subsection 1, clause 2. Now, if it is received from present employer, whether voluntarily or contractual, it is salary. If it is received from ex-employer, it is still salary. Okay, it is to be included as profit in lieu of salary. If it is received from other person, or person other than employer, employer might be having some tie-up with some other entity like insurer, etc., and they are paying annuity, then that annuity is not salary, because when you are receiving it from a different person, there is no employer-employee relationship. That annuity will be taxed under the head income from other sources. Is it clear to you?
Yes, sir.
Okay, that is to be taxed under the head income from other sources. Annuity part is clear. It is maybe salary or it may be income from other sources, depends from whom we are receiving. If you are receiving from present employer or ex-employer, then it is salary. But if it is receiving from some other agency, then it is income from other sources. You might have heard one more term, which is called as notice period salary. What is this notice period salary? Let us say employee is to be terminated, and company has given him notice. Employee may not come to the office during notice period, and he may receive salary for that. So company wants to terminate the employee immediately. And in lieu of that, since the company might not have given him notice, which the company is supposed to give, company may pay him some salary, which is called as notice period salary. This is just like salary, it is fully taxable because employer-employee relationship is there. Understood this notice period salary?
Yes, sir.
Okay, after this, whatever has been taught to you, is it clear to you?
Yes, sir.
Thank you.